Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, money can be a significant stress trigger for many people, with such worries often having a detrimental impact on their health. A recent survey, which was conducted by Blueprint Financial Planning, found that 1 in 5 people are kept awake at night by such worries. John O'Driscoll is the Managing Director of Blueprint Financial Planning, and he joins us now to explain how a financial advisor can alleviate these concerns. John, I'm struck by your recent survey, which reported that 20% of people are kept awake at night by their money worries.
Morning, Karl. Lovely to speak to you. Yeah, that's correct. Hard to believe, but I suppose it was no great surprise to me since I commissioned the survey. I'm a big believer in people trying to get financially fit. In my view, there's kind of 4 pillars of people's lives: mental, physical, financial, and nutritional, health or wellness. And I often find in my day job as a financial advisor that a lot of people come to me for guidance because they don't feel equipped to deal with the financial pressure that they're under.
Do you find that the recent cost of living crisis has heightened these financial worries even further?
Yeah, for sure. I mean, there's been so many interest rate rises in the last couple of years. I had a client who went from paying 1.25% per month on their mortgage up to 5.75%. There was 14 interest rate rises, and it was almost a case like, what do I do? Do I fix? Do I try and switch mortgage? Should I engage with someone? And a lot of people just kind of took maybe burying their head in the sand and hoping that things will get better and that the rates will start coming back down. So I think that anyone who has children going to school or child minding, a mortgage, there's a lot of, kind of fixed costs, a lot of drains on your income. And obviously when there was a financial cost of living crisis, that only kind of exacerbates those issues.
So for those listening this morning, that 20% that have the financial worries that are keeping them up at night, what advice have you got for them?
Some very basic things, I suppose, is everyone should kind of work some kind of a budget. And, there's so many different budget templates now. Like, one can be downloaded off my website. And, even if you Google the budget template, on an Excel spreadsheet, very straightforward. Pay yourself first, which is something that also my clients try and automate a certain amount of savings away per month yourself. So that at least you're always building up some kind of a nest egg. Try and streamline your direct debits. A lot of people have direct debits coming out at maybe 7, 8, 9 different dates in the month. If you can try and streamline them, so then at least that most of your direct debits are going out maybe at the start of the month, and then what you've left over for the rest of the month is kind of money that will kind of see you through for the rest of the month. Build up a rainy day fund. I know it's a cliche, but it's really important. Also have a sunny day fund. Bit of a cliche, but have money that you're building up for something that you want to buy or enjoy or pay for your dream holiday, or make something kind of aspirational. And I suppose really engage with a financial advisor. We're highly qualified, we're highly regulated. A broker can deal with 10, 12 different companies in the market. A bank can only deal with one. So deal with an impartial advisor who can build a plan for you and help you from where you are to get to where you want to be.
And of course, while the budget is absolutely important, probably as important is carrying out a financial health check assessment. So what should that include?
Basically looking at your income, outgoings, looking at all your different insurances. A lot of people are overpaying for their different insurances, life cover particularly. If someone has stopped smoking in the last couple of years, they might be able to get non-smoker rates. Health insurance has seen significant increases in the last couple of years, so people should be reviewing that. Sitting down and look at your outgoings, very straightforward. Are there direct debits? Is there leakage per month of, subscriptions that you're not really using? And these are all might seem like small, arbitrary things, but if you add up, you might have 50 or 60 euro worth of a month there on direct debits that you're not really using on subscriptions over the year. That's 700, 800 quid. A lot better in your pocket than that. And if you were to earn that net, it might be $1,500 worth of a gross savings. So it's worth sitting down and doing a kind of a deep dive into your finance.
Well, if you've just tuned in, I'm joined by John O'Driscoll from Blueprint Financial Planning. John, many people who would consider themselves as financially savvy may be wondering how they can make their money work harder for them. So how can they use money as a tool to get more?
Warren Buffett, who is probably the most well-known and successful investor in the world has often, coined the phrase of, basically pay yourself first. So before you pay any bills or outgoings, you automate a certain amount of your savings away into a long-term savings plan that is usually equity or stocks and shares based to leave it compound over the long term. And that's a really good way of generating a bit of wealth. There's an excellent book that I would encourage any listener to read. It's called The Psychology of Money by Morgan Housel. I gift it to all my clients. It's probably the most easy to read and easily understood financial book, no jargon whatsoever, and gives real life examples of people who have earned very modest salaries over their life and who have accrued massive wealth. And a lot of it is by basically investing over the long term and let compound interest and let the financial markets do what they do. Avail of very generous tax rebates on pension contributions. There's been significant contributions or changes in pension legislation for company owners in the last couple of months, where now there's the ability to really put a lot of money into your pension. No BIK, no unemployer contributions. So there's been a huge change in what's called a PRSA, personal term savings account. So again, engage with someone, an expert who can show you the way that you can harness what you have at your disposal.
And in terms of personal savings and investments, do you recommend that your clients follow one particular route, or do you suggest utilising a range of savings and investment products?
One thing that we always do for clients is an in-depth investor profile questionnaire, risk profile questionnaire to assess people's both attitude and aptitude for taking risk. But obviously in a very kind of, generic way of explaining it, you keep, maybe 3 to 6 months income in an easy to access deposit account. Your long-term savings is always your pension. Avail instead of extremely beneficial tax incentives there. And then for kind of like, anything, 5+ years, 10+ years, I would always encourage people to put money away in a savings plan with the likes of one of the insurance companies in Ireland, which will have a very, very diversified portfolio of assets within it, and you are basically benefiting from what's called euro cost averaging, which means you're buying into the market at 12 different points in time over a number of years. So even when markets are going down, it actually can be beneficial for you because you're buying more units.
And what are your thoughts on individuals purchasing property through their pension and availing of the rental income tax-free?
Yeah, again, excellent option. Irish people, obviously, there's a very, very significant interest in property in Ireland. A lot of my clients would have self-administered pensions and would have property in it. Again, it's not a one-size-fits-all. It can be very beneficial and can make sense, but there are a lot of nuances that you have to look at in terms of how much is inside in your fund, what charges have to be cover legal expenses. There's been quite a lot of changes, as I mentioned, in pensions in the last while. So a lot of the self-administered pensions now are subject to more stringent reporting than they were previously. Fees have thus increased. So absolutely, property yielding 8 or 9% a year that's going into your pension fund tax-free can be fantastic. And as I said, I have a number of clients who've done that. But again, like it's not a one-size-fits-all. Financial planning is very specific. What's good for you might not be good for your next-door neighbour.
And finally, John, the government has recently published a bill which will pave the way for the introduction of the auto-enrolment pension scheme. As auto-enrolment pensions are expected to commence next year, what advice do you have for employees that may help them to plan for this change, and what factors should they be considering?
I suppose what they should do really is start engaging with their employer. A lot of employers will already have pension schemes in place that maybe employees might never have looked at because they didn't want to contribute. Every employer in the country must give access to a PRSA anyway, to their staff, or to be able to facilitate through deduction from payroll. But I would probably encourage them to start looking at exactly, what the proposed amount of money that they have to put in themselves, what the employer will match it with, start engaging with their HR function or their direct line manager, and see exactly, probably start budgeting for exactly how much they can afford to put in.
Well, if you've just tuned in, that was John O'Driscoll, the Managing Director of Blueprint Financial Planning, and I'd like to thank John for sharing his advice with us this morning.
Southeast Radio's Business Matters with Karl Fitzpatrick.